Okay, this is the XJO, and I've just this is an old chart with the pitchfork here, and it's a little bit busy because I've drawn all over it. But you can see it's starting to poke out the bottom of a really long-term pitchfork, and once it's hit that, it's had a reaction and jumped back straight up back above it. I've also got this shorter term, a smaller pitchfork here, which I had a first warning line added, which is just parallel to the median and the lower time, and I think we can add another warning line there, and bang, it's pretty close to the tail of that Tuesday's big shakeout bar there. So that's interesting, isn't it? So the price always goes somewhere that makes sense, I suppose. We can probably also now add, for the bears, a trigger line, seeing as we're starting to breach our lower tine of our big. I might colour it red. There we go. Colour that red as well. Oh. So that's our trigger line of our big fork, and so where is that sitting at? The 32.30, if it wants to get there. So we've had a reaction off our second warning line of our black pitchfork. It's come back and it's back tested the or it's just missed actually the first warning, but that looks like a back test there. So that would suggest it's got to come back. So we can look at this warning line here as possible support in the short term. We've also got this little trend line I've had for a little while there, connecting these pivot lows here, so that might provide support. And we've also got the bottom of the bottom tine of the big red pitchfork there as well, so to keep an eye on. Anyway, there's a few lines there, but I'll get out of here because that doesn't give me proper volume on Pro Real Time. Okay, here we go. We want to have a look at the volume here. So we are in a downtrend, here. No question about that. I'll just put a channel here that's just a parallel line from those highs to the lows here, and you can see we've got a Monday it touched the bottom on high volume, and then we had a bear trap there that would have caught a lot of shorts out. That's broken below it and then broken back straight back above it on really high volume. We'll possibly look at some support resistance lines as well. So horizontal supports. I picked the high volume bar, closest really high volume bar there as resistance line at the, what's that, the 45.6 and the 46.2 roughly. So, but we're a bit away from that at the moment. Let's have a look. What else can we do? There's another high volume bar over here at the 41.75, and that's actually hitting its head against that at the moment. It's closed right on it, on that pivot low there. So that's resisted the price going up, trying to get above there. So that would suggest that's got to come back for the short term anyway. We can look at some other ones. I've drawn some other ones. We've actually tagged one here that's real interesting, right exactly pretty much. And I got that. How did I get that? I got that from this here. There's a lot of money in that volume there. That's if I zoom in on there, I'll just show you. I just set it right under on that bar. It's a down bar and really high volume, and that's set this move up, going up. So they were buying smart money, buying down bars, and what I'm looking for is where the money's been spent, and that's a lot of money there. So I've just tagged underneath of that, and I think I've tagged another one over here somewhere as well for this bottom one, but that's your really high one. So we'll just have a look here. Around that was August. When was that? August 2009, and it's so it's had a response to that line over there. Where did I get this one from? Oh no, that's not right. I think that really high volume one was this one that we've just broken down on. Let's have a look. Yeah, no, that's the one we've broken. Okay, so that's quite significant, I think. And that was around what, that 42.50, 42.60, and then this was one beneath it that it's tagged as well. But I'll put that 42.60 up here. There it is there. So it's actually gapped below that. So it's had a response to it. I know the line's there. And it's gapped down below that. And now once it's broken that, there, I don't think they're going to want to get above that in a hurry. Okay, so let's have a look what's happened. We've had, what's that, Friday. Last Friday we got a high volume down bar. Smart money buying down bars, so we're very wary now that there could possibly be some buying in there. Next bar closes lower and closes on its bum. So again, that confirms that the supply in the previous bar, or there's supply there anyway, but it confirms that the supply has been swamping demand. But then we get a high volume down bar again, but it's narrower, so we suspect now, we're automatically suspicious that maybe there's some buying in there as well, so we're still wary. And then the next bar goes down but closes higher, so that confirms that there's hidden buying in, what's that, Monday's bar, buying right on this trend channel here, and it's gone down on really ultra high volume, and those two bars together constitute a bit of a shakeout. And we've got really high volume coming down and closing higher, and then the next bar closes higher again. That confirms there's been buying in that in the bottom there. Then we had so what's that? That's Tuesday. Tuesday was the day. Wednesday springs up again on high. It's pretty high volume. It's but it's narrowish, so we suspect smart money selling up bars, so we suspect that it's a weak bar. The next bar is on lighter volume again, and it's a test. It tests below into the body and tags into this the top of this high volume area before. So there's now less selling in this area where previously there was a lot of supply, and that's confirmed by the next bar closing higher, but that bar is on lighter volume again. That's what we call a no demand bar. It's the lightest volume in 3 bars. It's closing off its side. It's like a little narrow upthrust, isn't it? And so that's a weak bar, and it's not going to get above these significant levels on that sort of volume, on that sort of weakness. So it's got to come back down. I would think. So you'd have to say that the easy trade at the moment would be the short trade. But you'd be very wary of trying to short this in this area here, because that's there's definitely a lot of buying in there. I mean, the herd are selling. The herd aren't buying. The herd are selling. The news is bad. Everything's really bad. The herd follow the news, so the herd are selling. So who's buying here? So the professional money have bought this, and only buying can get this reversal happening here. That's a lot of that takes something to get that to happen, for it to go down like that and then to react right up on that sort of volume, and that stopped this down move in its tracks temporarily, at least anyway. Now, there's been a lot of talk that maybe this is could be just a short cover rally where they've covered their shorts, bought to cover their shorts, and getting a little suckers rally going up here. And that could be right too. And got all the bears come out now. It's going to 3,000 and 2,000 and you know, whatever. But I think we've got to respect the fact there's been a lot of buying in this bar here in the short term, and you'd be very wary of being short in that bar. But definitely any weak bars trying to get back up above these levels at 42.60, and right where we are now is another important one, 41.75. Any weak bars trying to get up into this area are definitely easy shorts. You know, you got some safe short trades on any weakness trying to get back above here, because there's a lot of, even though there's buying in there, there's also a lot of supply. High volume always means high supply, and they will want to test that supply, and the enemy of higher prices is supply of selling. So they will not want to take this higher until, if they do intend to take it higher, they won't want to take it higher before they've absorbed the supply down in this area. So best case scenario is this could possibly be the start of accumulation. There's enough volume there to suggest this possibly could be the start of some accumulation. But they're not going to, once it's broken these significant levels, they're not going to be in a hurry to get it above there. I mean, why pay higher prices when there's plenty of supply here to fill your long positions? So that they'll break back down into this bar, I would imagine, to accumulate if that's the intention. They're not going to let, what else you've got in this area here is it's all locked in buys. Anyone trying to buy going down here, they're now locked into the wrong side of the trade. They're holding, I mean, they're holding just hoping it'll come back up again, and they'll probably sell just to get out of their position if they can. But I don't think they're going to let them do that. I don't think they're going to let them get out of a bad position just yet, because what they will try to do is put pressure on these positions by breaking it down into this volume bar here where there was plenty of supply before, and they'll try and just keep pushing into there until they get just about, you know, trying to shake out any supply from any buyers that have been in this down move, and that's just how it works. So that's the best case scenario. We'll have some sideways movement, possibly going right down into this bar before it goes up. So it's actually good now that it's broken this level here, because it actually makes it easier to trade, because there's a little bit, even though there's a downtrend here before, was a bit lackluster with the volume. Now that we've broken a significant level, we've got clear resistance above us, we've got a potentially very strong area below us. You know, the lines have been drawn in the sand, and you can trade those. You've got nice widespread while this volatility is on, so it's very profitable for trading if you know how. If you can short, trade both ways, you've got nice spreads there to be doing that, and you've got clear areas, marked areas now, strong areas above and below, but definitely in a downtrend. So the easy trade is the short trade. Any weak bars going up are your less risky trades, because you'll have a lot of help from all these sellers over here. It's going to take a lot of effort to get above there, and they're not going to spend that effort in a hurry. They're going to just try and put pressure on those to get rid of those guys locked in this area here. So you've got any weak bars going up here are going to get smacked, and there'll be good short trades. But I'll be wary of going short in this area, because even if it is going to 3,000, 2,000, or the pit of hell, or wherever, that's a big investment to be making. That's a big investment. That's a big long investment to be making, just to go up and down in a hurry. If this is redistribution, and it could possibly be that as well, if they're redistributing and then wanting to position themselves short again for another leg down, it will still take time for them to distribute what they've bought in here. this buying in here, because they're buying it down, started here, here, and here, all this area here. That's going to take time to redistribute. They're not going to smash this down in a hurry. So they will, and anyone trying to go short in this area, they'll punish short term, I think, because they don't want you being short with them. They want you buying while they redistribute. So they'll be hunting for your buy stops. So be very wary of going short in this area, even if you believe 100% it's definitely going to 3,000 or 3,200s or your 2,000. High 2000s. It's going to take time to redistribute this investment here, if that's the case. So I'd be careful of shorting in this area, but definitely any weak bars coming back up, trying to rise back up here that look weak, like that's a weak bar. Friday was a very weak bar, it's a no demand. You definitely, Monday you'd be looking for the short trade. It'd probably be a very good short trade actually, because the Dow finished up. I might just have a quick look at the Dow actually. Where are we? Where are you, Dow? Dow finished on no demand. It's narrow spread, lowest volume for a while, so that's a no demand bar. That'll come down. But what it might do is encourage, it might use that up day to encourage people to go long on Monday. They might use that to try and gap it up, maybe not. But I think the intention is to smack it down. So if it does gap up, then you'd be, I think they'll be selling it from the get-go on Monday, and that could possibly be a very nice, they'll give you a very nice short entry if that's the case. So if it gaps up on Monday and it's looking weak from the get-go, and it looks like they're selling it from the get-go, I think you'll have a nice short trade, I believe. And because I think it'll close lower wherever it goes. I think it'll possibly close lower than our no demand bar, and they'll have what they'll do is they'll use the up day on the Dow to do a trap up move, and a trap up move encourages new buyers into the market and locks them in. Goes up, new buyers jump in, they close it lower, and that locks them into a bad trade. And as you see them when they do it here, you got up by here, there's your trap up, and that's the no demand. See that lightest volume in 3 bars, just like that. And then now we've got a good day on the Dow, so you're probably going to be looking at one of those trap up moves. They do those trap up moves and then put pressure on the position to pull them, drag them back down, and then take it up. But then they're never letting these guys out of a losing trade. So so that's what to look out for on Monday, I believe. The trap up move. If it's looking weak on the get-go, it looks like they're selling it from the get-go, especially if it tags as 42.60, then you're or whatever, a lot of shares on the market looking the same, whatever that resistance line that it's broken on whatever you're trading, you could possibly get a really nice short trade for the day. I'd be very wary holding anything long at the moment overnight, or anything short overnight, because of the volatility, especially if you trade leverage like CFDs, because they whatever happens overnight, they will gap it. Even if you're right, they'll still gap it against your position and to try and take out your stops. So it's especially on the big guys like BHP, Commonwealth Bank, all your banks actually, they'll gap that they'll gap the price against you before taking it in the direction you thought it'd go in the first place. So anything held overnight, you're very unless you're using very wide stops, it's very dangerous at the moment. But anyway, that's the XJO. I might have a look at the All Ordinaries as well. Same sort of deal, same sort of looking pattern there. What have I got there? 42.70, which was from, where did I get 42.70 from? I think I had to go to Incredible Charts for that one as well. 42.70. Oh, I've gone back a way back to get that one. there we are here, this puppy here around August, around the same time as the a really big high volume on the XJO. There we go. It's a down bar, very high volume, smart money buying down bars, and that's set this move up right from there. Now, as I've just tagged under that line, then that's from August 2009. And we are just tagging. We've broken. Once we broke that level, that's a significant level to break. Once they break a level like that, a significant resistance level, they're not going to want to take it. It takes effort to break those. And if they spent effort breaking them, they're not going to want to take it back up above in a hurry if they intend to accumulate lower down. So that's how I got the 4270, and you can see a weak bar again, a no demand bar, exactly the same as the XJO, but with bull trap move. We've got that same channel. They've started buying a high volume down bar, always wary. It's smart money buy on down bars, and that's what they're doing. They're buying that bottom of that channel there, and then we've had this big bull trap move. Bear trap move. It's like a sucker's rally in reverse because everyone's selling. It's not smart people selling here. It's everybody selling. The herd are selling. When everyone's selling, that's when you've got to be careful if you're shorting, because that gives the professional money then opportunity to take positions against the herd without damaging themselves. So when everyone's selling, then be careful that you're not following the herd, because if you're following the herd, you're eventually at the end of it, you're going to get tagged. This is what happened there. But anyway, it's the same thing. Any weak bars coming back up into this area, you can short pretty safely. That's your safe trade because we are in a downtrend, so we pay more attention to our weak bars in a downtrend. I'm going to put a horizontal line just on there as well. I have done anyway, but I'll just put on that pivot low as well. So any weak bars trying to get up here are your safe shorts, but you'll be wary of going short now. Anywhere near this high volume area here, you'll be wary of being short in that area, because you are at the bottom of a trend channel now, and you are and again, even if it's going to break lower, there's a big investment being made here long, so it'll take time for them to redistribute that if that's what the intention is, and you'll see that as a bear flag forming, and then we really won't know what happens till closer to the event, but it's going to, right at the minute, it's going to be dangerous shorting anywhere near, if price is anywhere near this down bar here. But certainly any weak bars going up are going to be a really safe shorts, especially if it tries to get back up to the top of this downtrend channel there. There'll be really, really low risk entries if it wants to get back up there. But I think it's going to need a lot of effort getting above this 4270. It's going to, why would you buy, if you want to accumulate shares, why would you buy above here now that you've spent the effort to get below this level, when you can buy, when there's plenty of supply in here? They'll want to keep hitting that supply and putting pressure on locked in buyers here to get out of there, to hand the shares back over. And but still potential accumulation happening there. And on the XJO, and so be wary of going short there, even if they are going to break it lower. I'd still be wary. You've got to respect the fact that there's a lot of buying in that bar for the time being, I think. One thing I might look at is what are we going to look at? I might have a look at the small ordinaries actually. That's sort of, again, the same looking, same again. What have I got there? How did I pick that channel there? I know. Anyway, it's a down channel there anyway. Again, same looking bar. Actually, even though it's gone down a bit, the volume isn't as dramatic as it has been for the bigger guys. I mean, the movements have been pretty dramatic, but the actual volume hasn't been as dramatic, haven't they? I mean, we've had, and that's a dramatic volume there that kicked it up, kicked the small ordinaries up at that time. But this isn't. This hasn't run down as hard, even though it's run down hard, but you know, not the same sort of selling pressure as the bigger guys. So I don't know if that's good or bad, but anyway, again, they're buying down here. It's gone up to confirm it. I've had a test and then a no demand, so that's got to come back down and reaccumulate in there. And I think there's an argument there that this could potentially be an accumulation area. The volume's there that we like to see at a low, so it could potentially be accumulation, but it could also possibly be a bear flag. But if it is a bear flag, they'll spend time there redistributing. They'll spend time there either redistributing or reaccumulating. So you've got to be careful going short anywhere near this bar. But any weak bars going up, definitely you can short. Being in a downtrend, but I think that has to come back as well, because that's a no demand, same as the others. I did have up there, the one thing that does worry me, I was having a look at the other day, is, let me have a look, the XFJ, just looking at the volume there. Now that looks pretty much the same, except it's not really, because your up bars are still in really high volume. Let me have a look at the, I'm sure I'll give you more lines on that. XFJ. No. Banks, no, I don't think it was the XFJ. I think XFJ is sort of doing the same sort of thing, but you do actually have some really high volume up bar there. Then you have a test, then you have a no demand, so pretty much the same sort of thing as you've seen. But what I do notice is on Commonwealth Bank, I'll just bring up Commonwealth Bank here. What have I done? Get out of there, that's pro real time. I get out of there and do CBA. A worrying thing on CBA, I notice. I've got this had this downtrending pitchfork here for a while now, and it's oscillated around the pitchfork. There's a big, really high volume daddy bars, which have capped the price and now act as resistance. So any weak bars coming up into this area, you're going to definitely short. That's a really bad, it's a no demand, but still pretty high volume up thrust. So that's really, really weak. So you had your buying down here, you had this really strong reaction. And they actually started buying this here. They bought it here, they're still buying it here, and then up she goes. But then really high volume up bar. So I mean, these up bars are as weak as this down bar is strong. That's a bit of a worry, because what the hell are they doing? We don't know. Is it that just because they've absorbing a lot of the supply up here? Is it's gone up, or is it? But anyway, the next bar is a test, tagging the top of that, so that's strong. But the next bar is a no demand, so that'll come down as well. And I think that'll have to come down. I think that'll still oscillate around this median line, I would imagine, and test back into this bar, just pretty much the same as everything else. So there'll either be beginning an accumulation phase to take it back up, or they're redistributing, covering their shorts before positioning themselves short again to take it down. But either way, they're going to spend time in this area either reaccumulating or redistributing. So any shorting in this area would be very dangerous. Very dangerous to be shorting there at the moment, because that's a big investment to make. There's a lot of buying in there, and I think you've got to respect that. But certainly any weak bars going up, like that's a weak bar, that's on your intraday, and definitely will give you nice shorts, especially with all these wide spreads. We'll get some very nice trades, I think. But anyway, that I think is better stop there because I'm dragging on now. And